Okay, guys, so welcome to today's class. This is class 3 of 8, and this is the first out of the 2 consolidation lessons. So what we're going to do over here, we're going to do question 20, paper 1, question 1. That is a consolidations question. So what I'm going to do in this lesson, I'm going to read through the scenario with you. As we read through the scenario, I'm going to bring some important points across and some theory across and how to think through certain stuff. And then once we're done reading, we'll just do a quick. So basically, we're just going to read through and give some background on theory. Then in the next lesson, we will actually answer the question. You can see it's 71 marks. So we need quite a bit of time to answer. Okay, so obviously in an exam, you have to answer this, whatever number of minutes, but this is not an exam. We are learning over here. So I'm going to spend this time going through the scenario. Even if it's less than 1 hour, then we can just carry that time over to the next lesson where we may need to spend a bit longer. Okay. So as I read through, it's important for you to just to pay careful attention, because there's important aspects that you will have to pick up from the scenario that will guide your thinking. Okay, so, but I'll also bring it to your attention if something is extremely important. So they say Bond Oil Limited, Bond, is a company listed on the Zimbabwe Stock Exchange. It is in the business of manufacturing cooking oil from sunflowers and has investments in Sunflower Limited and Mutaka PVT that are strategic to its business. All group entities have a 31 May financial year end. Okay, so that's important. So here you can see you have Bond Limited, and so far they have 2 investment companies, which is Sunflower and Mutuka. And they're telling you all companies in the group have a 31 May year end. So you are a second-year trainee in the finance department of Bond and are responsible for assisting the group reporting accountant. Extract from the trial balances of the group companies for the year ended 31 May 2017. So this 31 May 2017 is most likely the current financial year. Okay, so let's have a look what they're giving us. Okay, so they're only giving us okay, so they're giving us some credits, which is share capital, retained earnings, revaluation reserve. Take note of retained earnings and the revaluation reserve. It is a number at the beginning of the year. Then we have profit for the year, and then we have other comprehensive income, which relates to revaluation surplus. Then we have property, plant, and equipment, and we have current assets. Okay, so at this point, we have an extract of the trial balance at 31 May 2017, which is your current financial year. And included in the trial balance is retained earnings and the revaluation reserve, which represents balances at the beginning of the year. So just take note of that. So it looks like we only have 3 companies, the parent and 2 investment companies. We don't know what they are at this point in time, but we know there are 2 investment companies that form part of the group. So now we have Sunflower Limited. Sunflower Limited is a sunflower farming entity with operations in Bangkok. Bond acquired a 25% interest in Sunflower on 1 June 2011 for $250,000 when the retained earnings of Sunflower were $300,500. On this date, Sunflower had no revaluation surplus. On 1 July 2011, Bond also acquired options, which, when exercised, entitled Bond to acquire a further 35% shareholding in Sunflower. Okay, so let's have a look at this point in time. So over here, we acquired a 25% interest. Okay, so we're not sure what the 25% interest is at this point in time, but without any specific details, generally a 25% interest will mean you have an associate, which means you have to equity account, okay? But that's in the absence of other specific information. But now they're telling us that on 1 June, we also acquired options, which is 35%. So when you say 35 plus 25, that gives you 60%. Generally, more than 50% means you have control. So we could either have an associate, meaning we have to equity account, or we have a sub, which means we have to consolidate. So we need to understand how does an options work. Okay, so they say these options can be exercised between 1 June 2016 and 30th November 2016, after which they will lapse. So what's important to take note over here, we can only exercise the options during that particular time period. So that means from 1 June 2011 up until 1 June 2016, we can't exercise those options. So it means we won't be able to exercise control. So from 1 June 2011 up until 1 June 2016, we only really have 25%. If, however, that 35% could have been exercised anytime we wanted, then we may have to consider whether we must look at it from a 60% point of view or not. But because the 35% can only be exercised from 1 June 2016, the time period before 1 June 2016 means we can't exercise 35%. So that means we only have 25%, which means we will only probably have significant influence, which means we will have an associate. Okay, so just take note of that. So they say each share is equal to a single vote. The board of Sunflower is controlled by simple majority vote through board of directors. Okay, so there you can see, so we only have 25%, so we will have significant influence. The board is composed of 5 directors, and Bond would be able to appoint 2 additional directors if it exercises its option. Bond has an intention to obtain an interrupted supply of sunflowers from Sunflower. Okay, so but at this point, we only have, we can't exercise, okay? I mean, on 1 June 2011. So it's only from this point in time, from the current year, that we have to consider whether we have control or not. So they say Bond exercised its options on 30th November 2016. The retained earnings of Sunflower were as follows. Okay, so now they did exercise the options. By exercising the options, they now have an additional 35%. So now they're going from 25 to 60. They're going from significant influence to control. So before the current year, we have an associate. From the current year, we have, or at least from 30th of November in the current year, we have control. So just take note of that. Okay, so they're giving us those numbers. Okay, we will have a look at these numbers when we look at the question. So they say Sunflower has not issued any shares in addition to those issued at its incorporation. The fair value of Bond's 25% interest was 335 on 1 June 2016 and 562 on 30th June 2016. All assets and liabilities of Sunflower were fairly valued on 1 June and 30th November 2016. Okay, so what's important, here we have a change in ownership. Okay, so during the year from 1 June 2016 to 30th November 2016, we had a 25% interest. On 30th June 2016, on 30th November 2016, we acquired an additional 35, which means we now have control. So from 30th November up until the end of the current year, we have control. So there was a change in ownership, and the change in ownership went from associate to subsidiary. So that is a change in the nature of the investment. When there's a change in the nature of investment, we are deemed to have sold our entire interest. So remember what happened. We have 25%, then we acquired an additional 35. That additional 35% that we acquired gave us control. So we went from associate to subsidiary. As you can see, the type of the investment changed. First associate, then sub. So when a situation like that happened, where before and after the type of the investment is different, then the account IFRS tells you that although you only acquired 35, the IFRS standard tells you that you are deemed to have sold your original interest. What is our original interest? The 25%. So we didn't actually sell the 25%, but IFRS deems that we have sold the 25%. And the IFRS deems that we have acquired the 25% back immediately. So that's very important to understand. And you're going to see it come through when we do the question, and I'll reiterate the point again. So that is why this fair value that they're giving us on the 25% interest is important, because IFRS deems you to have sold your original interest at fair value and then reacquire it immediately at fair value. Okay, so just be aware of that. What I'm going to do, I'm going to share with you the videos on change in ownership that I did with the CTA students. Then you must watch it, and then you can learn the different ways of how to deal with change in ownership. Okay,
Thank
so
you.
just take note of that. So we will deal with what you call it. Okay, so we'll explain this again. So now they say during the 2016 and 2017, Sunflower made the following sales to bond at a markup. So this is intercompany sale. Okay, so this is an intercompany sale, and we will show you how to deal with intercompany transactions. Okay, so it's an intercompany transaction. Remember, from a group perspective, I don't know if you joined my group class, my free group class that I had at the beginning of the year in February or March this year. Then I explained the concept of how groups work. So, so with groups, remember what we're trying to get. We only want to show transactions with those outside of the group. We don't want to show transactions with those inside of the group. So therefore, intercompany transactions are removed, because we don't want our transactions. We don't want the group financial statements to include transactions with those inside of the group. We only want the group financial statements to show transactions with those outside. Sorry, outside of the group. Okay, so just take note of that. So that is this company. Before we move on to the next company, do you have any questions you want to ask me for clarification? Yes.
For me, just the confirmation of the subsidiary. We only started on 30 November, not
Right.
deemed to be on the.
Yes.
Okay.
So only from 30th November do we consolidate. So before 30th, so from 1 June up until 30th November, we will do equity accounting, which is an associate. And then from 30th November, or basically 1 December up until, what's the year end? 31 May, we will do consolidation. Okay, because that's where when we have a subsidiary. Guys, happy with that? Any questions before I move on to the next? Justin, Tao, Dinashi, Walter?
I'm happy my side. Just need to confirm with the team if change in ownership is part of the scope for us. Anyone?
Justin, I was also wondering the same thing. I actually sent you a message text to questioning if we were supposed to be doing change of ownership level.
Isn't this your guys' question bank?
I'm sure I got it from the material for our first year, but I'm not quite sure about the change in ownership. Tao?
Just
Yes, kindly assist. Is change in ownership part of the scope?
last time when I think that's when we do Maji recognition and Gigi. Last time they mentioned it's part, but it's not at the current one.
What do you mean?
We'll do it, but not at CTA level 1.
Oh, so CTA level 2.
Something like that, yes.
Oh, okay. Yeah, but we're going to have to do it. What I'll do, the question might not work out if we don't do it. So what I'll do, if it's not part of the syllabus, anything relating to change in ownership, we'll slot in the number. Okay, we won't work it out. But everything else we will do. So you do equity accounting, associates?
Yes.
Yeah,
so we'll just do the equity accounting for half of the year, and we will do consolidations for half of the year. The change in ownership aspects, I'll just slot in the numbers. Okay, then I'll just highlight it to tell you this you mustn't worry about. Okay, because I don't think the question will work out if we ignore it completely.
Okay, thank you, Faiz.
Okay, then I'm not going to share the change in ownerships with you. I was just going to confuse you. Okay, now we're going to do Mutaka. So they say Mutaka is an internet-based retailer which took the Zimbabwe online retail market by storm in 2016. So do you know this company? Right? Do you know, is this company real?
No, I don't think it is. Anyone who knows Mutaka?
I mean, even it's a similar company, they're not going to give the real name. But I mean, is there an internet-based retailer that took the retail market by storm in Zimbabwe? So for example, here by us, it was likely being Takealot. Okay, so I just want to know.
Okay, not really. I can't think of any example. I don't know other guys.
Okay.
High fives.
Yes.
Unfortunately, we haven't reached that stage. We still rely on the South African ones. I think Takealot would be.
So maybe this is an African question and they just kind of made it similar to your guys, what you call it. Okay, no, that's fine. So bond acquired. So I always ask if you can remember when you can recognize a company, then for some odd reason, the questions become a little bit more, I won't say easier, but maybe a little bit more enjoyable, because you can kind of relate it to a company and how you are in your mind, you are doing calculations that may be of a real company. You understand? So then it makes the whole learning experience a lot better. That is why I was asking. And it also just when you know the company, you can kind of understand what the company does and so forth. So when you read something, it may make a little bit more sense as opposed to having it completely hypothetical. Because what you must know, most questions are set, like from, for example, like the psych people that set questions. They obviously past lecturers and stuff, or even they are lecturers and stuff, but a lot of them are also consultants, or they have like their own consulting type business, right? Even though they are lecturers, whatever. So then they will set a question based on their real world experience. So for example, our accounts, when I was at UCT, the accounts for lecturer, and I mean, she's still doing that. She's the chairman of the audit committee of of a quite a well-known asset management company here in Cape Town. And she's also on another audit committee, not the chairman, or the chairwoman, but she's also on the audit committee of another company, but a manufacturing company. So obviously she needs to keep up to date with certain stuff. So she reads quite a bit. So what she does is, if something comes that's relevant in that space, she will use that and set papers based on that for us, you understand? So in the questions look, then she used like real issues she came across, and she knows that actually there is something that gets taught and tested in CTA, so then she sets a question based on that. So many a times these questions on this level is from people that have real world experience. So they don't just make up something, you understand? So that is why sometimes it's nice if you can relate, even if you read an article in a paper or something like that. It's nice if you can relate, because if they must ask you a theory question, you can like relate to real world scenarios, just experiencing it. So that is why you want to always try to see if you can pick up, so that you can picture interacting with that company in the real world, so that you can perhaps provide solution suggestions in your answer based on what you can picture. So just think about those kind of stuff. Don't just think fully academic. Okay. So they say Bond acquired 100% interest in Mutaka on 1 June 2015. So that was last year, for $2 million as a means to diversify and to implement its online sales strategy. The equity of Mutaka was 1.6 million, and all assets and liabilities were correctly measured at fair value in the financial statements of Mutaka on 1 June 2015. So get me a tissue quickly, coming out. Okay, so then it says in January 2017, the board of Bonner resolved to focus on their core activities of manufacturing cooking oil. Instead of selling Bond's investment in Mutaka to third-party shareholders, the directors decided to distribute all the shares held in Mutaka to the shareholders of Bond. Okay, the following is an extract from the minutes of Bond's board directors meeting held on 5 January. It was resolved to distribute Bond's investment in Mutaka and to list Mutaka separately on the Zimbabwe Stock Exchange. The distribution will be implemented by way of a dividend in specie from Bond to Bond shareholders on the basis of 1 Mutaka Limited share for every Bond Limited share held by each shareholder. The transfer of the shares in Mutaka Limited to the Bond shareholders will take place on 30th June 2017. The date when Mutaka Limited is expected to be listed on the ZSE. The final value of the transaction will be determined on 30th June based on the fair value of each Mutaka Limited share at that date. According to the Memorandum of Incorporation of Bond, all dividends must be approved by an ordinary shareholders resolution. Shareholders will be asked to vote on and approve an ordinary resolution agreeing to the unbundling of Mutaka and the distribution of the shares as a dividend in specie on 31 May 2017. On 5 January, the directors expect that the resolution will be passed unanimously by the shareholders. Just quickly, do you guys deal with this?
I think the dividend species for us now, it's not yet in our scope.
Yeah.
Because for now we're doing the basic consolidation, associate, and
okay, so we're not going to
joint.
So we're not going to bother with this then, because this whole thing got to do with that. So you do equity accounting, and you do what else do you do? Consolidation.
Also joint arrangements in the basic consolidation, where you do your pro forma journals.
Okay, so let's look at the required. Okay. So they say discuss with reference the date of acquisition of Sunflower Limited by bond. Okay, so we will discuss this. Do you want to work through this, or are you okay with this? Or you want to, we're not going to do it today, we're going to do it in the next lesson. I just want to know, do you want to do this, or are you okay with it?
I think you can just do a brief discussion, considering that we need to first discuss the associate, then the subsidiary after the page.
And we're definitely going to do this. So here you're going to see now. So they say prepare the pro forma journal entries to account for bonds, limited's investment in Sunflower in the group for the year ended 31 May 2017. In answering this part, assume that bond had the power to direct the relevant activities of Sunflower from 1 June 2016. Okay, so from the beginning of the year, they're saying you must assume that they had the power to direct the relevant activities, meaning that from 1 June 2016, you must assume that you have control. Okay. Then they say discuss, number C, discuss including amounts where relevant, how the decision to distribute. Okay, so we're not going to deal with that one. Prepare the pro forma journal entries for Mutaka. Okay, so we won't do that. Okay, so then C, D, and E we won't do. That's all Mutaka. Yeah. Okay, so we're going to focus on A and B, but we're not going to do it today because we're going to need what you call it. So what I'm going to do is the extra half an hour of today. I'm going to put it over in the next lesson. So we have a 2 hour, we work through the question. But what I want you to do is to make sure you read through the scenario again when we come, before we start, so that you have an idea. So we're going to go straight into answering part A and part B. Then one of you, maybe Justin or Tao, you can just let me know and confirm that C, D, and E is not part of the required. You don't need to do that. Okay, you don't have to do it now. You can let me know again.
Now, okay. Is it possible that we just look, maybe, yes, do this discussion, but I think for us, we want something which is more relevant to us. Maybe the associate we can do, but we want something to do with the pro forma journals.
Yeah,
a proper question that relates to us. I don't know if you've got one.
I can take from what you call it, from CTA, UNISA.
Yeah, we want something, I think, that can assist us, because we want something that is like, which has got pro forma journals for subsidiary, then associate or even joint control, joint arrangements.
Okay, so I will look tomorrow and then I'll send to you by tomorrow. Okay.
So that we just do the full question, not to have something that can have breaks and all that.
Okay, so you don't want to do this question. So you're not going to do this question. I'll find another question and then let you do that. Is that you want to do?
Yeah, for us to be more comfortable in that.
Okay, so you all agree on that? Everyone here? Justin,
yes, fine.
Yes.
Okay, so I will find one tomorrow. And so we're only going to resume on Monday again, but I will find one by tomorrow, Saturday for the latest. Okay, so Saturday, Justin can just nudge me. If I didn't send by tomorrow, then Saturday, just let me know. Okay.
That's okay, fine.
Okay, then no problem. So I'll see you guys next week, and I'll send that question before the time. Then you must read it, and we will go straight into the question on Monday. But so what I'm going to do, I can't give you a pass exam, so I'm going to give you a pass test. The reason being is UNISA's past exams is going to have change in ownership in, because they're going to incorporate all of it together, right? So it's going to have change in ownership. So I can only give you a pass test, okay? The pass test is not necessarily as good, but not necessarily always exam level. It's definitely good, but it's not always going to be exam level. But I can't give you a pass exam, because a pass exam is going to be like this. Okay, so I'll take a test. So just so you know. So it is a good question, but it may not necessarily always be the exam level that you would get. It's going to be a good level, but not exactly always exam level. But I guess why exam level is different, because exam level is completely integrated and it's going to have change in ownership. So I'm not going to give you an exam question. Okay.
All right.
Okay, cool. Just so before we end, so you do change in ownership, you do, you do associate, you do joint arrangements, you do consolidation, you do pro formas. Do you do balance sheet, income statement, change in equity statement?
Yes, we do. Those basic ones.
Okay, I just need to make sure, because obviously there's different types of questions. I need to make sure I select the correct one. Okay, but at least it's so all of that, so I can choose anyone basically. Okay, then I'll see you guys on next week. Okay.
All right. Thank you.
All right. Thank you, Faiz.
Okay. Bye bye.
Thank you, Faiz. Apologies for the mix-up.
No problem.